Hey everyone, it is Evan here from the Trade Risk on Friday, January 25th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So I am feeling much better today. Thank you so much for all of the well wishes. Whatever I had, whatever sickness seems to have subsided. I am a little fatigued today, but no real symptoms and in pretty good spirits here. So glad to be back with some good health. Let's jump into the markets with the market technicals dashboard here. You can see we finished off strong for the week, had a gap up and fairly good finish this week, a little bit off the highs, but on Friday, but some good gains, about 1% across the major averages. Remember, the markets were closed on Monday. It was a holiday shortened week, so the 5-day change actually dates back to last Thursday, which is why you're seeing, what looks like we've extended gains this week, but we didn't quite put a big rally in or really exceed last week's gains at all. We'll take a look at that in the charts in just a moment. We are above the 10 SMA, the 50 SMA. We're still below the 200, and this last column is not correct right now. We are not above last week's highs across all of these averages. The holiday is messing with my data here, so please disregard that. You don't have to email me. I'm aware that we did not close above last week's highs. So when we go down to the sectors, we can see semiconductors. This was the shining star this week. Remember, we've seen this rotation now of leadership. Last week was financials, which were really off to a good start or helped kind of leg the market up again. This week, it was semiconductors up almost 7% via the SOXX, and then technology soon after following there, 2%. On the downside, biotech, really just kind of flatlining, healthcare and staples. When we look across some of the major markets here, we see emerging markets, international markets leading. We see the VIX, which is still unwinding a little bit, and a little bit of that volatility coming out of the markets, and natural gas, which is also suffering a little bit there, had a strong week last week, giving some back now, and the dollar really kind of coming off a little bit this week as well. So let's jump into the charts here of the S&P 500. We'll go to the weekly time frame. This is where we like to start our analysis. So each bar represents 1 week worth of trading here, and we are looking at the cash market, the cash settled S&P 500. So you can see we closed at 2663 here on Friday, and it was an inside week. That means we traded within or underneath last week's highs, but above last week's lows. That is a sort of volatility compression signal. It kind of tells us as technicians here that we should be on the lookout for a breakout when we do end up resolving above this bar's highs or this bar's lows. You tend to get sometimes an exacerbated sort of move there because we do have that pent up sort of inside week demand. Regardless, when we look at the picture here, the technical picture of the S&P 500, nothing changed from our review last week. All of the same levels are still very much in play here. 2600 below us, that is the relevant key psychological level that I think many traders are paying attention to. And as we sort of looked at and stated last week, it is our belief that we want to stay above 2600 to be acting sort of as strong as possible, to have the bulls still very much in control of this near-term trend that we've been in for the past 5 weeks now, 6 weeks almost. We do want to stay above 2600, last week's low or this week's lows ideally, but down to 2600. That is sort of the line in the sand. On the upside, we have last week's highs, which is very close to this week's highs, but coming in right around 2670, 2676, let's call it. That's the near-term sort of breakout level that we're going to want to see the market break above. We'll look at that closer on a daily chart. And then as we mentioned last week, we also have, or the next big relevant level is 2800. That is where the market topped out. That was the top end of the range throughout October, November, early December. That is where the sell-off that started in mid-December started to cascade from, was all the way up on a retest of this 2800 level. That's where we failed. That is going to be the next big big level to pay attention to on the weekly time frame. As it stands, we are still in a series of lower lows and lower highs here, so an intermediate term downtrend. That could change, but for now, that is the structure of the weekly time frame. If we go down to a daily chart now, let's take a look at the levels a little bit closer. We'll rotate over to the SPY ETF, and you can see again today, this was a holiday shortened week. So it was four days worth of trading, and we started off the week to the downside. We saw a little bit of selling pressure kind of kick off the beginning of this week, but that weakness ended up proving to be another sort of buying opportunity. Buyers stepped up and supported the market really exactly where they needed to, holding above, again, that 260 level on the SPY ETF. So you can see we kind of pushed down a little bit. We had a little bit of sideways here Tuesday, Wednesday, Thursday, and then we had this nice little pop here into the end of the week. Again, it wasn't a close at the very, very highs of the session, but still we held on to the majority of the gains. And heading into next week, this is our test on deck, basically, is the highs that we made on Friday the 18th. Can we take them out? Can we extend this rally? Can we keep the ball rolling here to the upside for the bull trend here and take this level out and start moving higher to, call it 270 or so, which was kind of the midpoint inflection point of that old range in late 2018. That's what we're going to be looking for. We saw the VIX kind of continue to pull back this week. So if we go over to the VIX, you can see 2% down that came out. We originally had a pop to start the week. So we had a 17% pop. We had to move over 20. And then in the last 3 trading sessions of the week, you can see we came all the way back down, closed at 17.38, the lowest level that we've seen since, lowest closing level we've seen since all the way back on December the 3rd. So definitely some complacency out there right now. Fear has come out of the market. Ranges, and maybe deservingly so, ranges have certainly slowed down here and are not moving at the fast clip that we saw just a few weeks ago. So those are relevant levels I'd be looking at. Next week on deck, we have some key earnings. We have the big mega tech giants out there, Amazon, Microsoft, Apple, which I know they've pre-announced or basically pre-announced already, Facebook. Those are all coming out next week, so they have quite a big pull and influence on the market direction, their forecasts, what they've done for numbers this past quarter, and then more importantly, what their guidance is and what they're seeing into the future. That's what's going to be important for this market. So expect a little bit of some catalysts there from those earnings. Most of them coming out at the end of the week, but let's pay attention to those and their influence on the market. Otherwise, I think that's about it. I don't really have too much else to add on the S&P 500. Volume on the week looks exceptionally light, but again, remember it was a holiday shortened week. So let's go over to the IWM now. And if we look here at this other board, you can see IWM also holding where it needed to. It sold off early in the week down to around this 144 level. I still believe this is an important market to watch. It has been the leading index on the way down, on the way back up, and for those reasons, I still want to pay attention to it because if we are going to get a strong directional move here, if we're going to see a reversal in trend or trend continuation, I want to be paying attention to the Russell right now. So far, it very much acted like the S&P did. It had some early weakness, and then on Friday here, it popped higher, almost retesting the Friday's highs. That's what I'm going to want to pay attention to, that 148 area. And then on the downside, still looking at, this is not precisely drawn on my chart, but more or less the lows made from this week, this 144 level. That's what I want to see the market hold above. If we can continue to consolidate and move sideways above here, and then eventually turn this into a continuation pattern and lift out, that would be very constructive. If we suddenly start breaking down below 144 on volume with very strong negative breath, uptick in stocks making new lows, those types of things, that would certainly be concerning and would suggest that perhaps the sweet trend that we've been enjoying to the upside is coming to a reversal perhaps. If we look at the NASDAQ 100, you can see here again very similar fashion, kind of popping up into the end of the week, early week weakness. tough tough to say. On the downside, 160, that's what I'd be paying attention to. Remember, this had been kind of the most relative strength, so to speak. I know the IWM has been the canary there kind of leading, but the Qs was kind of the first to get back into this old range. So from a relative strength on a longer term basis, this is already back kind of in the midpoint of that October, November, December chop. It continues to remain that way. If we started to lose 160, that's where I'd be concerned. On the upside, really, there's room up to 170 and even 172 or so, back to this last pivot where we failed in early December. So that's what I'm looking at here for the market. We are still pretty extended to the upside here. We did work off a little bit of those overbought conditions earlier this week. We get a nice pop to finish the week. Let's see how the market handles some of these key earnings and this range and the highs from Friday. Do we see some faltering here, or can the bulls keep the music going? That's what we're going to be watching next week. Till then, let's jump into some other markets now. We'll go to TLT next, which did finish higher this week. So we had stocks finishing higher to, or I guess call it flat this week. We saw TLT closing higher this week, and when we go down to a daily chart, they were holding. We did pop back above this 120 level from our last couple of videos. We talked about this being the area that the bulls wanted to support TLT, to keep this trend alive, to keep this as pent up and acting as strong as possible here, keep that energy in the TLT. We wanted to see buyers emerge around 120. We briefly sort of undercut it here, chopped around, and then lifted above it. So going forward, same belief here. I'd like to see these lows hold. If we can start to go range bound in between, call it 120 and 123, that would be constructive. At least the way I view it, I'd look at that as a continuation pattern perhaps in the future, but for now it needs more time. If it starts breaking below 120, 119 and change, certainly all bets are off there. If we go to oil next, oil here this week did close slightly lower. It's very similar to the equity markets. Inside week, traded below last week's highs, above last week's lows, and very much kind of comfortably moving sideways here. It looks resemblant to what we saw in early December, late November, when we kind of moved sideways in this chop here between 1060 and about 1140 or so. We're doing the same thing now. We're repeating that. We're certainly off of the lows at this point. Maybe this is some type of rounded bottom here. Nice little continuation pattern gets us back up to the 12s in USO if we can get a breakout and momentum hold. If we start to see a reversal below 1070 or so, then that, of course, would not bode well for the near future in USO, and I would want to be very cautious there as the downtrend could resume itself. So USO stabilizing, holding strong. We'll see how that inside week resolves itself next week. And we go to natural gas here. This did close down 3.5%, well off of the lows, though. You can see the good tail here on this weekly chart of natural gas. This thing is, kind of all over the place. It's a tough one to trade. There's a lot of gapping going on here in overnight gap risk in natural gas, and this thing can really get going when it starts to move in one direction. We saw that very clearly in November, and then elevator up, and then the elevator right back down in December. So as it stands now, it's a really kind of a messy pattern here. Not a whole lot to like about it. This could be a higher low. So maybe the lows from Wednesday of this week, maybe that turns into a pivot point and a higher low gets put in and we ramp from here. And if we can take out 30, maybe we start this process of trending higher. For now, though, there's not a whole lot of convincing volume. There's a couple of uptick days here that we saw on heavy volume, but it's still a chart that really carries a lot of overnight risk. So for me, I'd still be looking at this as a longer term range here, 24 all the way up to $30.50. We're in the middle of that range here, yet to be proven if this is a higher low. If I, gun to head, I would like to see this on the long side, but really not my cup of tea right now. I'm just sitting off and waiting patiently for a better setup in natural gas. Lastly, if we go to metals, GLD here, really explosive move here into the end of the week. We started to get that breakdown here, a couple of days moving sideways after trying to resolve this range from early January to the downside. But you can see we came back with some good volume on a breakout, making new highs on the year. So the metals, the bulls on metal, certainly holding up on their trend. Of course, that was helped by the US dollar, which is coming off this Friday. We saw with a pretty, ugly session here, looking like it might want to leg down again. That certainly helps any of the commodities and precious metals in this case. Silver also enjoying a nice end of week rip here to the upside, getting back towards the consolidation from early January. And maybe this is the retest. Maybe this is the higher low here. I'm interested in this. Going to be looking at this after I record the video to potentially take a position in it. Nothing at the time of recording this. Don't have any position in silver, but I do like the prospects here of a longer term trade in silver now that we're seeing kind of a thrust off of this pullback. So something I'm looking at, but I like the formation here. Ever since breaking above 14, buyers have been in control, and so long as we stay above 14, that seems to be at least the case, path of least resistance. So that, I think, covers all of the majors. Let's go into some of the individual sectors this week. If we sort by top performing industry sectors on the week, we have semiconductors up top, 6.9% to the upside on the 5-day change. You can see good volume coming in over the past couple of days. I know we had some earnings announcements in this space as well, but you can see SMH coming back to some very important key levels, getting back to almost that 100 roll that really, well, I guess it depends on how you want to look at the breakdown, but really you have all of this overhead supply that starts in right around $96 all the way up to $100. This is where we were at the bottom end of the range for late 2017, early to mid 2018. That was where buyers were stepping up to support this market. We broke down in October from that range, and now we've made a couple of attempts to kind of retest it and bump our head up against 100. Each has failed, and now we're coming back with kind of the longest stretch rally that we've seen, coming back into this level once again for, call it, the third or fourth time. So there are, it is still plenty of reason to be kind of cautious up here. Tough to be the marginal buyer up here close to $100 as it comes into all this overhead supply, but maybe fourth time's a charm. Maybe we cut right through this like a knife through hot knife through butter. I was going to say a knife through hot butter. Hot knife through butter, and maybe that is what helps fuel this market and keeps this market alive. Certainly no predictions there. I think it's the unlikely path at this point, but it's certainly an outcome to be aware of. Semis, good leadership this week. We'll see if they can continue. For me, kind of the top end of the range here, I'd be cautious on semiconductors. XLK, kind of closely related there, also getting a nice move this week, 2.5% to the upside. Not as clear cut on resistance here, but certainly rallying back into some of these old pivot points around $67 where we kind of drastically rolled over from in early December. Not much else to say about it. Tough to be a buyer up here as well. Risk to reward really doesn't seem skewed in that favor. And XLI really has gone quite V-shaped here from the lows sub 60 all the way up to $70. That's $10 in a straight line for industrials. Getting back into this old range here. Really tough to chase, but it's also tough to short because momentum is continuing up in XLI. So got to be cautious there. If you have positions, the old trim and trail is generally the tried and true advice. It's tough to be initiating new shorts right now. It's tough to be initiating new longs. So really tough to kind of do anything there. Kind of a wait and see mode. IBB, this one here, a little more actionable. So this is actually the worst performer this week. It was down just slightly, but honestly, I like this one probably out of the best that we've looked at just because it's had some time to consolidate. You remember, IBB was one of the first to rally off of the lows and reclaim some critical prior support around this $100 level, $101. This happened in the second week of this year, and now it's been kind of pushing up here and just moving sideways. So I like this consolidation here. It's kind of in no man's land. It's in the middle of this range. So are we going to 115 next, or are we rolling over to 101? Hard to say right now, but we do have a nice kind of sideways move here. Maybe the underperformance this week is a tell that this eventually kind of rolls back over and retests, but yet to be seen right now. We'll see how that plays itself out. XLP Staples, this was second worst performer this week, down just very slightly on the week. This one here had enjoyed pretty much a V-shaped move off of the lows as well. Again, tough pattern here to want to be a buyer right now, just because it's just really saw this kind of panic down, panic back up, and now there's just not a whole lot of support prior in here to kind of cling on to. So it's on the bulls to kind of support, put in a higher low. Really just not that interesting to me right now. And healthcare, to a lesser extent, kind of the same situation. I mean, it's clearly structurally in a better spot right now. It had quite a V-shape off of the late December lows, but you can see it's trying to hold on and test where prior support was. So this $89, it makes sense on why this is stalling here. This is where buyers kind of showed up many times over the past many months in XLV. So as buyers are made whole again, it makes sense that they would want to kind of sell at break even, and price, kind of that price memory is sort of at play here. So XLV, tough spot. Really don't have too much else to say about it. So that is the recap for this week, holiday shortened week. Hopefully you guys made through it okay. Remember, we got earnings out. We still have plenty to chew on heading into the final week of January. Going to have the first monthly close of 2019. Sure went by fast, and it's been a strong year so far. So quite the 180 from last December to January. So that's it for me. Thanks so much. As always, you can follow on the blog, traderisk.com/blog, or you can subscribe on YouTube every Tuesday and Friday. We do market recaps just like this. You can subscribe, get notified when we publish those new videos. Thanks so much. Have a great weekend, and talk to you all next week.